Hi everybody, from Ryan from Barrel Traders here. It is Sunday, March 31st, first quarter of 2019 behind us, and it's been a wild ride. First quarter was pretty good, and last quarter 2018 was pretty bad. So we've had a nice little comeback here, and you can see here on Friday we had a strong day in the markets. All the indexes were up, but internals still aren't that great. You can see we're about 50-50 on the stocks above and below their 200 day moving average, and 60-40 on the ones that are above and below their 50. So market internals aren't particularly strong. They're not super weak, but they're not strong either. So let's take a look at what groups were performing. It's kind of interesting to see what the money's chasing. On the week, we had industrial goods, services, consumer goods. Consumer goods were up there, and they were up there on the month too. So my Coke trade, consumer goods, is falls in that category. It looks good. Yeah, and technology was good in the month, but the week it was not so good. So utilities not a great on the week. So the markets strengthen, and some of the money's coming out of maybe what we would consider to be the safety trade and going back into some of the more growth stocks, if you want to call them that. So let's just take a look at what we've got on the watch, the different indices. You can see here we started looking at the U.S. Treasury 10-year. Was looking at this, was watching this, and you can see here it just fell off a cliff and had a bit of a bounce on Friday. We're at 241 now, and that was not unpredictable since it's just, nothing just goes down forever like this. But this is really low, and just still not sure what's driving this so much lower, other than maybe all the world economies are weakening. A lot of the other yields in some of the other countries are actually at negative rates, so maybe there's just overall concern about where rates might be going in a weakening economic environment. The Dow, you can kind of see here, if you draw a line here and here, we can do that. Just do a little bit of a, you can see here there's a trend line down. We broke above that on Friday, broke out from that, so we'll see if we get a continuation. There's obviously some levels here at that we're coming up against. This level here, sort of the 2600 level, 2620, and then we've got 26200, which is going to be a significant level of resistance, all the way back to here. So we'll see what the Dow continues to go higher if we just keep testing this level and then retreating from it. Weekly, again, kind of looks like we're stuck in a range here for now. The small caps, the IWM, again, it's been the weakest of the indexes. You can see here it's still below the 200-day moving average. Came up, tested it twice here. It tested it a couple times back here. Tried to get through it again and continue higher. Failed. And so the IWM and the small caps continue to look weak here, and they were weak on Friday too. They closed lower than they opened, and you can see here the RSI is right at 50, right in the middle. But it seems to be, maybe it looks like it might be rolling over. So let's take a look at what it looks like on the weekly. Again, not particular. This looks like a flag here. Whether it can break out and go higher, I'm just not sure, and so we'll see what happens there. But the IWM is something to be interesting to watch, and we can play that with TZA or TNA ETFs. QQQs, this broke this trend line. That was going lower. It seemed to go higher. It doesn't look particularly strong, but we'll see what happens on Monday. We'll see if we can get a continuation and back to this 182.50 level, which undoubtedly will be a significant level of resistance. Weekly, again, still looks like we're in an uptrend there. Maybe thought we were going to reverse there. That doji candle didn't look very good, but we managed to eke out another gain on the week on a little bit of a declining volume, but not bad. RSI continuing to go higher, so strength continues to look like money's flowing into the technology space. And the SPY, the 500, it's again breaking out a little bit here from this trend line that was heading lower, and we'll see where it continues to go next week. The 50's crossing the 200 day, the RSI is heading higher, had a bit of a double bottom here. And we did it on a bit better volume than we've had in the previous weeks. So not stupendous volume, but the volume was sort of looking like it was about average for the week. And the weekly candle, again, we kind of still look like we're in a bit of an uptrend here, but it may be starting to trail off. And let's look at the dollar. The dollar's been really erratic. I mean, it's sold off hard, and then it's come ripping back in this nice V. Really hard to trade Vs, but it all seems to be doing that. When it does a reversal, it seems to be these V reversals are really hard to trade, but it looks like the dollar wants to go back up and test this level here on this dollar index, the 26 level, and we'll keep an eye on that, because if the dollar continues to strengthen, could not be bad for gold and other commodities, could be bad for emerging market stocks if the dollar continues to strengthen. Let's take a look at what we got on actives. AVCO, I'm still optimistic that this is going to break higher. We had a nice day on Friday. Good price action. Went out at the high of the day, 540, and didn't do it on much volume, which was unfortunate. But looks like it might want to test that 6 level, which is where I'll be looking to take some profits, maybe 590. And just hope it follows through there. If it doesn't, I'm probably going to think about bailing, because once it stays there too long, I'd be concerned about a reversal. And took a trade on Dust on Friday. I just like the way it traded on Friday, and with a strong dollar, you could see it gaps up significantly on Thursday, and had a strong day Thursday. Gapped down on Friday morning, but then I watched it during the day. It was continuing to move up during the day, and I just decided to take an entry based on the price action and the fact that I had been watching Nugget and Dust, and it just looked like Dust was going to continue higher. Went out strong, and I'm still holding it from about the 1760 level, and looking at this 1890 level as a possible first exit. So hopefully we can get up into that area, and I'll look at taking some off there. Coke, yeah, we talked about the consumer goods stuff. It's been strong, probably partly because the consumer goods have been strong. So been involved in it since way back here, and I'm just hanging on to it because it still looks like it wants to go higher. Just trying to see here. This 47 level could be an area of resistance, but I like the way it's trading right now. It's ideally it would fill this gap up at 49, but I think that's a bit of a stretch. And the XLU, it really pulled back on the last couple days here, and it had a bit of a bounce today, so still in a little bit of that. I've taken some off, but we'll keep an eye on that one and may end up having to bail on the rest here. On watch, let's just take a look at a few of the stocks on watch. The EEM, which is the Emerging Index ETF, watching that, it just seems like it's stuck in a range right now here, and with the strong dollar, I'm not sure where this is going to go. Nugget, again, I've been watching Nugget, and when it started to fail, I took an entry on Dust. I already talked about that. Watching the semiconductor space, technology was fairly strong last month, but week it wasn't very great. So we'll just see how that pans out here, and hopefully we'll see if we can get a move higher, or if we're just stuck in a range as well. And TZA, just watching that, just based on the discussion we already had with about the small caps, the IWM index, TZA, TNA. Watch that for a trade. And involved in the natural gas short. I did it with a Canadian fund since I was trading it in my Canadian account on this one, but it's, it looks like it's heading back down. This UNG is natural gas is maybe heading down further. We're into the part of the season where natural gas prices typically drop because we get through the winter, so consumption tends to drop off, so prices get lower. And the last one to look at is the energy sector, and I'm going to be watching some of that on Monday to see how we open up on the oil, because it looks like we're just right at a level where we could be breaking out on crude oil prices, and if we are, then there could be all sorts of possible plays there, including some ETFs and in the oil and gas exploration space, and UWT, obviously the long crude oil price. So be watching that on Monday and see how that looks, and see if we start to break out here, because we've got a level here at about 2050 that we could stall out at, but it could give a nice risk to reward here. So that's it, everybody. Hope you've all had a great weekend. It's Sunday, March 31st. We will see you in the Bear Bull trading room on Monday morning, day trading. And if you are interested in swing trading as well, look at that. Check out my book on Amazon called How to Swing Trade. So enjoy the rest of your weekend, what's left of it, and we'll see you in the room on Monday morning if you're going to join us. Bye for now, everyone.